Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comment section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, happy Tuesday. Let's check out our open positions. Pretty much green across the board for my portfolio, just down the semiconductor ETF that we're trying to roll. So let's go by one. Alcoa, we got filled yesterday at, 39? So we're up marginally here. This is April expiration, trying to get to 19. The semi ETF we're trying to roll at 0. So no credit, no debit, just straight across 0. Right now bids at $10 credit. Hard. We'll see if we can get this one filled over the next couple weeks, okay? Short put spread on UNG, trying to get to 12. Bids at 9, marks at 15. So halfway there, let's say. Newmont. Coming back on Newmont here, only down $27. That one's coming back. That's a short put on April as well. And finally, our short put on CCJ for March. That one's coming back today as well. Okay? All right, cool. So let's see if we can find a couple new opportunities for today. Just a reminder for everybody, tomorrow is last episode before we're going to pause for a couple weeks or so. I'm going to go on a bit of a hiatus as I work on a project for work. So tomorrow, come with questions, come with things to ask, discussions. Just make a list of questions. We've got all the time in the world. We can make it an 8-hour day if you want, okay? New opportunities for today. Zoom is up first, post earnings. Looks like it gapped up. Broke above the 200-day and is selling off big time. However, doesn't look to be that big of a move. Nothing that we can do anything about. And this is the right move to make. A gap up and sell off. Everyone's taking profits on this. Neutral seems fair. I don't believe there'll be a lot of ratings changes following this one. Here's your chart. Just hanging out in the middle here. This quarter is probably a nothing burger. That being said, good liquidity here. IV is now lower than normal. That makes sense post earnings with a very small move of 3.5%. Red on the put side and red on the call side means the movement post earnings wasn't more so than that was priced into the earnings or the options prices. So in that case, we kind of do want to avoid this one. You would have wanted to open either side yesterday. Call side, 75 is paying 74. That's fair. Put side, the 55 is paying 31. I'd pass on this one. Okay. Next up, Coinbase, COIN, up big today, 5.5%. How many days after earnings are we now? Selling by ARK yesterday. So this is a Bitcoin play for the most part. So we are about a little over a week after earnings. Resistance at, so we're coming up to a bunch of resistance here from back in 21. July 21, and then even some more here at October of 21 at 225. So as it starts hitting these, let's zoom in a bit here from back in 2021. See, right now it's at 205, which is right about here. It's going to start hitting all these areas of resistance across the board. So you could anticipate a pullback anywhere between now, 205, that's the low here, technically 209 here, and all the way up through, let's say, 230, okay? So if you wanted to sell the call side today, above average volatility, so that's good. That's what you're looking for. Earnings are not till May 2nd, so that's after April expiration. Everything's looking good on this one. Call side, you need to go out to anywhere starting at the 280 all the way out to the 320 to sell. So everything looks good on this one except liquidity. Liquidity is not the best on this one. I know as you get into these higher number stocks, liquidity starts to dry up. Let's say if you sold, what would you want to do? If you sold 320 and bought 330, how about that one? It's very far out, so you may not get paid for this one. 737 minus 670 divided by 2 divided by 1,000, that's 3.3%. So if you went as close as the 280, selling 280 and buying 290, what do you get? 1120 minus 1002 divided by 2, that's almost 6% there. So if you took the 280, where's that on the chart? This seems fair. 280 is all the way up here. Doesn't mean it can't get there, but that's definitely, this is a good one to make on the call side. However, I'm going to stay out of this one. This one's a good deal. Liquidity is a little concerning though, okay? Next up, Lowe's post earnings. Only up 3% or so, so let's see. Call side, you have to sell 260 and buy 270. The strike at the 270 is to a liquid. You got an 11, well now 15.59 spread. That's to a liquid. Put side, you have to go all the way out to the 210 and you're not going to get paid for it. The 220 is a little too close for comfort. I wouldn't sell that one. Let's skip this one. Macy's, we've traded Macy's before. Back I think in August was it? Or September. All right, post earnings move here on this one. Looks like it opened down as rallying big time. Yeah, so we traded Macy's. We sold the put side back on August 22nd here. Moved against us, and it got filled right before the earnings in November. Rolled it a couple times. Now here we are. I don't know. This is a hard one. Just chart-wise looking at it. You do have this downward trend line. So you can make the case for some on the call side. But interesting. Let's see what's paying what. So same thing on this one. Lower IV, that's no good. Put side, you'd have to sell the 17. You get 40. So the put side's not, well, that makes sense. The put side's where your risk is now. Since it's moved up so much, there should be a pullback. Call side, if you sold the 24, you get 40. If you sold 24 and bought 26, if you sold 24 and bought 26, what do you get? 40 minus 17 divided by 2 divided by 200. Almost 6% there, so that's not bad. Not crazy about this one. 3.6% dividend. That's interesting. Pass. Next, let's take a look at both CVX and Hess. There's some talks about this deal potentially falling through. So let's take a look at both. CVX, that's just Chevron, down 3% on news, 4% yield. That's good. Earnings are May 3rd, so we got plenty of time till earnings. And this is an oil play, so keep oil in mind as well. Let's see, on the put side, you'd have to sell 140 It's okay priced. It's not bad. Call side, you'd have to go out to the 165 and buy the 170. May not be worth it. Nah, skip this one. Put side maybe. 140 is a little close. 140 for April expiration. It seems fair. I'd rather wait for more movement down, say to 138 or something, and then sell the put side, but not right now. Okay, let's look at HES, HES. Down marginally on the news. Their earnings are April 1st. Hess shares drop as fight with Exxon over Guyana oil threatens Chevron takeover. Yeah, that's a fight over a region down in South America called Guyana. Okay, put side for Hess. Oh, these are expensive. However, too illiquid. Not enough volume, okay? Interesting. Yeah, so you've got a spike in volatility here, which means these are more expensive. That makes sense because this deal may potentially fall through. So there is some premium in here to be sold, just the liquidity is not good. The 125 has zero volume today, and the bid ask is 142.60. This one's close, but no cigar. Next, Cava, CAVA, fast food Chipotle style Mediterranean spot. Let's take a look. Earnings, right? Yeah, earnings yesterday. Today after the close, is that right? It says today's the 27th after the close. That's today. Today's 27. But it looks like reports. So this is an earnings announcement. They announced the earnings. I think E-Trade is wrong here. Yeah, E-Trade's wrong here. They should say the 26th after the close. Okay? So anyways, post-earnings move. Not a lot of chart history here. Call side, you need to sell 65. Expensive, but illiquid. Put side, you'd have to go out to the 40. Fairly priced. Pass on this one too. Unity Software up next, down 6%. Good heavens, you have to go all the way out to the 25. Let's take a look here really quick. Maintains buy, price target at 32. Cut at HSBC on the price target, that is. All right. Upgraded to neutral at Piper. Okay. So, looks like a gap down, sold off, and has already rallied back a bunch. So, you may have missed the move on this one. If you still want to jump in on the put side, even though you may have missed the boat, yes, for April, you do have to go all the way out to the 25. If you want to cover it, you'd have to buy the 20, and there's not a lot of volume, not a lot of liquidity, but there's great liquidity at the 25. You can see the 25 has the most volume. That makes sense. You'd want to sell that one if you want to jump in today. 25 on the chart. Right here. That seems awfully close, actually. Huh. For April, the 25 seems a little close. I don't know if I'd take this one. Yeah. Close, but no cigar on this one too. Everything's got like 5 things right and 1 thing wrong. Next up, what a shame. Let's look at some cruise lines. Norwegian LCHL, right? Yeah. Up 14.5% post-earnings move. We'll also take a look at, let's do Carnival. Here, let me write this down. Carnival and Royal. All right. Earnings were today before the open. Looks like they had a good quarter, so they're up because of it. I'm not sure what was priced into the move. And this one's tough as well. Chart-wise, you have this ascending trend line here. and you have a descending trend line here. So it's going to break out either to the upside or the downside. At this point, we just don't know. So it's hard to pick a side. Put side, you'd want to sell 15. You get paid 24. That's not bad. Call side, you'd have to go out to the 22. The 21's a little too close. Sell 22 and buy. What are you going to buy to cover? The 23 or the 24, and it may not be worth it. 15 on the put side. Let's take a look on the put side. 15 is down here. This seems fair. You've got some support here at 15 as well, going back to November. So you could make the argument of selling the put side here, even though it is up 14.5%. That's a lot. But you could bank on this upward momentum continuing to at least 1985 or something, okay? Because you'll get some resistance here and then here as well at the 2030, okay? So there you go on that one. I will stay away. Close. Again, everything's close, but we're just missing one component to setting up a trade. Let's take a look at Carnival, CCL. So their earnings are March 27th, exactly a month away. Interesting. Call side, you want to sell the 19 and buy the 21. Let's take a look at the math on that one. 33 minus 14 divided by 2 divided by 200. Not even 5%, so skip the call side. Put side, if we go out to the 13, sell the 13. If you want to cover it by the 11. 25 minus 8, is it? Divided by 2, divided by 200. Same thing, just about 4%. So I'd pass on this one. It's not worth it. You don't get paid. Royal RCL, so this is my favorite cruise line. May 2nd on earnings. Challenging chart. Call side, you'd have to sell 140. You get paid about 191. That's not bad. Selling 140 and buying 145. That's 188 minus 111 divided by 2 divided by 500. 7.7%. Jeez Louise. Interesting. Put side, you'd have to sell 105 and to cover it 100 or 97.50. That's a nice option. Let's do that, the 750 spread. 101 minus 44 divided by 2 divided by 750, not even 4%. So call side is where the action is. Selling 140, buying 145 on the chart. 140's up here. I don't know if you can see it or not. Seems fair. Seems fair. Okay. It's hard to go against Royal Caribbean, though. That's the problem. Next up, Viking Therapeutics, VKTX. So they had a phase 2, I think, trial come out in their favor of one of those weight loss drugs that works faster than Eli Lilly or Novavax. So they're up big on it, but looks like they've sold off a bit. I don't know if there's going to be enough strikes available to sell. There aren't. So if you look at the call side, the move on this was so big that there are no strikes available out of the money to sell. Put side there are. If you want to sell the put side, you need to sell the 34. You get paid 140. It's just very illiquid. You've got an 85, 195 spread. Very low volume, not going to get filled. Selling the 30. Got some volume at the 30, but still too illiquid. Interesting, right? Let's take a look at Amgen. Because of this, they may be down. Yeah, they're down because of it. Amgen's results are May 2nd. So we can look at the put side here. Huh. Well, I'll be. This one's interesting. Put side, you need to sell the 255. You only get paid 160. So it's not really worth it. For a $255 stock, you're only getting paid $160. This should be higher. Skip it. Okay. Let's follow up on Carvana, CVNA. Their post-earnings rally continues. Up again. Remember, you're saying the past couple days waiting for it to get to around 100. Obviously, it's not there today, and it probably won't be there by tomorrow. So, just knowing in the future, I'm going to follow up with this until it gets to 100. I will sell a call spread when it gets to 100, but not today. It's on its way. It's having a monster day again today. Upgrades or something, maybe? No news, just up 14%. So on the call side for April, you'd want to sell. You'd have to go all the way out. Son of a gun. So this is challenging. The strike you'd want to sell is the 110, and there's nothing farther out available to cover it. So hopefully over the next couple of days, more strikes farther out become available to cover selling the 110. Today you're going to have to leave it be. These are very expensive on the call side. Put side, you'd have to sell 50, and you get paid 128. That seems fair. 50 on the charts way down here. That seems fair. Would have been better to sell them yesterday. Okay, next up. The IWM looking for 210. I know it's up today. Not there yet. Getting close. So yeah, if it's up at 210 by tomorrow, I'll open up a short call spread. But as of today, it's on its way. You've got this upward momentum. You can actually make the case for selling the put side here. You'd want to sell the 187. You get paid 138. 187 on the chart is down here too. This one seems very fairly priced. You have some support at 187 as well if things go against you. And you've got the 200-day. We'll follow with the IWM tomorrow. The IWM's down tomorrow. We might sell the put side. I know it sounds weird, but you've had this big move up, pull back, and now upward momentum again, suggesting continued upward momentum. I like this one on the put side, and then as soon as it gets to 10, the call side. You might be able to get in and out both sides really fast. Moderna, mRNA. What are we looking for in this one? Post earnings now 4 days. We're going to take this one off the list. It hasn't moved significantly in either direction to make it worth it. Roku up next. It's getting close. It's going to catch support at around 60. You could see it's hitting support from back here in November of 2022. That's why it's kind of leveling out. From back here, you can make the case for on the put side here. Let's take a look. April. You want to sell 50. You get paid 75. Cover at 45. Let's do the math. 75 minus 30 divided by 2 divided by 500, only 4.5%. If you want to do it cash secured and you have $5,000, you can just sell the 50 straight out. If you like the stock, this seems very fair at this point. Fibonacci. APA looking for 28.50. Not there yet, but close. 28.50. Reason why support from back here. And also back in September of 2019. Okay. Close. Not there yet. All right. That's it for this list. Let's look at our IV rank scanner. We'll sort by volume. I think we'll just do one page here. IWM we just looked at. NVIDIA, too big. Marathon has earnings coming up tomorrow after the close. AMD. Palo Alto's still on this list. I wonder if it's time to get in and sell the call side now. Pan W. Okay, so we sold the put side last week. Made our money. Now if you want to sell the call side, you got to wait till it gets up to at least 333 all the way up to 360. So we're not there yet. So we're kind of hanging out in no man's land. We're getting close there. It got up to 327 today. If it gets to 333 to 360, call side would be interesting. Selling on the call side, yikes. Liquidity is not the best here. You'd have to go... Never mind. Skip this one just because it's too illiquid, okay? All right, back to the list. Coinbase we already looked at. Robinhood, we looked at it yesterday. Pass. Norwegian we already looked at. Riot. No. ARM. No. Micron we've already got. Chip exposure. Rivian still on the list even though we're post earnings. Pass. Hims had earnings this morning, up 31%, but it's too illiquid, so I know we're not even going to bother with it. Carnival we looked at. XBI. I'm still scarred by that one. Workday. Do we look at Workday yet? Steve, what number do you look at to determine the liquidity? Is it bid-ask spread? Exactly. So we're going to let's take two examples. Let's take something that's illiquid. Let's go with, let's look at HIMS. So a couple things to look at for liquidity. Obviously, if you have a 1 cent spread between the bid and the ask, that's ideal. That's like the best. We'll look at SPY next. SPY always has a 1 cent spread, and that's what you want. You can also look at volume. So there's some of these strikes have zero volume today. Okay, you want these into the hundreds and thousands, not in single digits or zeros, and as well as open interest. So open interest means how many contracts in general are open. This is for volume for today. This is open altogether. So very low liquidity here. As you can see, these numbers aren't even moving. Like if you're looking, it's staying 20, 35. There's a little bit of movement everywhere. You can see some numbers moving. But if you go to SPY, which probably has the best liquidity of anything, these numbers are constantly changing. Okay? A ton of volume. 2 cent spread here. 2 cent spread across the board. 2 cent spread everywhere. Okay? And if you look at today's expiration, same thing. Tons of volume today. Tight spreads, 1 cent spreads everywhere. That's what you want. Because even if you do get filled on an illiquid option, which is possible, it's hard to close them if you get into trouble, and it's hard to roll them as well. So rolling's almost impossible. Okay? So there you go. That's what you want to look for liquidity. Probably one of the most important things. We'll make a list of things tomorrow on what to look for before opening a position. But liquidity is definitely at the top of the list, okay? Good question. Workday. Pfizer, no. No. Viking, we already looked at. FXI. AMC, MicroStrategy, AI. Macy's, we already looked at. Big Bear. That AI, I don't even know this one. BBAI, let's check it out. Never heard of it. BBAI. We definitely do have a spike in volatility, absolutely, so that's correct. Chart-wise, getting resistance back here from February of 2023 at 370. Call side, there aren't enough strikes available to sell. Put side, you'd have to go out to the 1, and it's too illiquid. You've got a bid of 0 and an ask of 75 with 0 volume. All right, next up. GDX skip. Baidu on the 28th, so that's tomorrow before the open. We'll follow up with Baidu tomorrow. JD has got to be in March. That makes sense. Bumble today after the close, so we'll follow up with Bumble tomorrow. Lows we looked at. Marvell, known. All these semis are still up here. It's very annoying. The K-Web. CrowdStrike on the 5th of March. Coles. On the 12th. Too close. Vertiv, Plug. We're kind of at the end of earnings season here, so we're going to run out of possibilities. Boeing. Newmont, we've got our short put. Let's take a look. NEM. We're short the 27.50 for April. Today, $27.50 is down here. Today, you'd want to sell. The 27.50 is too close, and the 25 is too far out to make it worth it. And I would skip the call side. Yeah, that's right. We still have some implied volatility that's above average. Interesting. Okie dokie. ALB. GameStop. ALB. Too illiquid. Put side, call side. Same thing. You got the 155 is too illiquid. Next up. Let's do one more, and then we'll call it for today. Pinduoduo, Lilly, Berkshire, HYG we've looked at. For solar, Salesforce is coming up. Snowflake's coming up. Chewy. Let's take Chewy, and then we'll call it for today, okay? We got Devin today after the close. Let's look at Chewy. CHY. And then we'll call it... Nah, what the hell. Sorry, CHWI. Oops. Earnings are March the 20th, so we're less than a month away. That's going to throw a pickle into things. You may be able to hop on the put side. Maybe. I don't know, man. Let's see. Call side's paying 60. Put side is paying 33. So call skew. You'd want to sell the... This makes sense. So, obviously, just looking at the chart, it looks like it should have a bounce. So people, retail that is, are buying calls, which is driving up the price, which is making them more expensive, which means as a put seller, you want to, sorry, as an option seller, you want to sell the call side here, but you're going against the grain. What was the strike on the call side? The 2250. 2250 is right here, and that seems too close for comfort. All right, we'll wait till after earnings anyways. All right, so to reiterate, tomorrow we will do a show. It'll be the last one, but we can go all day if we want. We're going to go on hiatus for a little bit. We will be back. This isn't the end, but we'll definitely be back. Just have some urgent things to work on at work, kind of in crisis mode right now. So think of some questions today and tonight, and then tomorrow morning we'll go over them one by one. And if you want, we can go over stocks you're thinking about, or we can go over questions you got, anything, literally anything you want to ask. Let's do it, okay? Sounds good. All right, thanks so much for watching. Tune in tomorrow at 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. Go live trading options. Also tell your friends to tune in tomorrow, and also check up. You can review all the old episodes going back as far as you want, okay? Same shtick every day. All right, have a great Tuesday. I'll see you all tomorrow morning.